The topic for the discussion is importance of simplifying tax compliances, role of technology. So basically, it's taxation and technology. So technology is the in thing, and the question is, can anyone survive without technology? Even a rickshawala is today accepting 10 rupees by Paytm. So it's a technology. So technology is the core actually, in a way. So the question which comes for business is, what's the extent of technology which you use and what's the need of technology actually? The importance of technology can be gauged from point that if you receive notices, so you must be wondering that can I respond it in 2 days, 5 days, 20 days? Company like us, sometimes we take 2 months to respond to a notice. Is it because of technology or is because the data are not prepared in sync manner? So what really it is actually? So is technology a panacea in the sense that it can address all tax needs, or it is an enabling tool actually? If one looks at from an industry, I'm working in industry for last 20 years, so I can tell you that technology is not a panacea in that sense. It's an enabling tool actually. It assists the tax function because your principles of taxation are not going to change with technology. The principles of taxation remain the same actually. But what technology does is it aids you actually. It provides you automation in sense of speed, accuracy, reliability. Now these are the 3 core virtues of tax department, which is reliability. You give a data to a tax department, the first question he asks you, is it reliable? From where did you source this information from? And why this reliability is crucial? Because on it he is going to accept your position or not accept a position. So reliability is the core. Now if somebody doing a manual analysis and some company is relying on a technology, in a manual thing there is a human intervention, but technology cuts the human intervention. So that's the beauty of technology. Now to what extent you are using technology, it's up to you actually. It depends upon the wisdom of the company. GST is one case where it's all tech enabled. So it's no longer indirect tax GST, it's a technology tax in that way. Because without technology, GST cannot survive. How it can happen? I cannot imagine itself. Or everyone sitting here, if anybody can perform a GST in a large setup without the technology, I'll be like, wondering how it can be done. So automation in a way is a way forward actually, and you cannot live without it. And even if you look in the paradigm shift in income tax department, corporate tax basically, it's faceless now. In a faceless regime, you receive notices in a faceless manner. The response what you need to give in a faceless manner has to be very precise, concise, and in easy way which can be understood. Now this, to my mind, if you have source data from a technology based source, means your backend has worked accordingly. So if you are on an ERP and that ERP is has modules or schedules in that build which allows you to give that data in, I won't say with a click of mouse. Now click of mouse would be like something like a nirvana state, but that in some case it might happen. In most it will not happen. You would need some time to prepare those data, but how soon you can get it, that is what automation does actually. Tedious compliances, if you look, tax deducted at source, it's a classic case where it's moved as GST as into technology now. You can't do tedious compliance without technology. It's impossible actually. For a large company which get into huge volume sales and inter-units, department, branches, and huge setups, factories, how it can happen actually? ERP did came in India in long time back, and that time tax was not that pressing in that sense. It was there, but with automation, what you are doing is you're cutting human intervention. So tax department in most companies now you'll see is lean and mean actually. So you say that I'm handling a company of $2 billion, $3 billion, but how many people are there in tax department? Maybe 2, 3, 4 at the best. They are able to handle it. Like in Dabur, I'm handling, we have got in group 300 companies, and I've just got 7 people. So how this work is happening? Only through technology, that's all. I need to file 300 returns. Humanly, it's impossible to do it manually. So, but to what extent you use, it's up to you, as I said. Recently, I shared an experience, in a transfer pricing situation. A lot of people in Big Fours and all, they approach you for automation of TDS, transfer pricing documents, corporate tax. Somebody told me that even a corporate tax return or a computation can be, automated in a sense that they can gear up the system in such a way that you don't have to do a manual Excel calculation. So the GLs and all are such a way, designed that, at least 90% it can be automated. And I was wondering whether it can be done or not. But as I am becoming more experienced and, and understanding this, I think there is some substance in that. That technology is an enabler actually. It helps you. What it does to a tax function is that the data authenticity is that you are not questioning them. You rely on that data. Where you then you put your focus is on the tax position what you are going to take, which is the ultimate thing what a tax guy does actually. That he need not worry on the authenticity and reliability. That's gone, it's given actually. And then he is able to focus on the positions. But if a tax guy has to question everything, the reliability, the tax position, to my mind, he cannot discharge his tax functions properly. He will at all time be under some sort of suspicion. Whether I can rely this data given by accountant, this guy from factory, what he has sent, I cannot understand. Audited data, not audited, reliable. So many questions crop up in your mind. Forget about tax position. The data itself becomes unreliable. That's where the difficulty comes actually. In a recent transfer pricing assessment, what happened to us was, department just gave me 7 days to answer 35 questions. Now, one of the questions which I'm just putting up for discussion is that sale of a raw material. So, an Indian company sold a raw material to an overseas AEs. The kind of questions what department is asking, at what price you bought this good from your third party? Whether this raw material is produced by you? If yes, give the answer. If it is not produced by you, you source it from a third party, give the detail of it. Okay, you paid 100. At what price you transferred it to your related party? Let's say 110. Okay, 10 rupees. Did you sell this good to another third party? Oh, you sold at 120. So why did you charge 110 to a related party? Now, these are the data which can be very small also, and it goes into a very huge also. How do you manage this data if you don't have technology in place? More than technology, the mind behind that system. So who would put this system? MIS department, the CFO, or the tax department? Who is responsible for this data? Because the tax guy will say, boss, I have received this notice to the CFO, and I don't know whether accountant will give. If he cannot give, I'll say to the department there is no information. Is that the way to answer this question? Or a tax guy is supposed to become an accountant. He'll start getting into each unit's parts and subparts and try to extract the information. Is it possible? But most of people here are tax guys. Most of people actually you become tax accountants also. So you're not just tax guys actually. So because you tend to not believe in anything. So accountant to banna hi padta hai. So by default you become tax accountants. And otherwise it's very difficult to mismatch, crisscross, yes, it all would be there. Ultimately what it does is that it brings transparency and speed into the tax function actually. And that is where the happiness comes actually. Imagine a situation, tax department sending you notice, huge details, 50 questions, 70 questions from your overseas subsidiaries, domestic subsidiaries, inter-units, transfer between ATIA, non-ATIA, all sort of details you can give in 7 days. If this can happen, you know, I would say to my mind, a tax department will say, boss, this company has got system in place, and that is the first victory to my mind itself to prove your bona fide, that we have got nothing to hide. We have got systems in place, and we are able to provide this data. But let's say you are not giving this data, you are seeking adjournments. 1 adjournment, 2 adjournment, 3 adjournment, giving the detail at the fag end. What would happen? It's bound to face additions. What is the cost of addition? Ultimately, you might succeed in getting this deleted. But the cost of litigation, that sometimes is high also. This will not be just limited to 1 year. Till that relief you get, there are 5, 6, 7 years has gone by. Contingent liability builds up. Stay of demand. No, I will not give you the stay of demand. This is the continuity. You are knocking the door of High Court. The risk escalation matrix goes up actually. Purely because why? Because you sought too many adjournments and gave the detail at the fag end. Versus your attempt, endeavor should have been to give the information at the first instance in 100% manner, in a manner which satisfy the officer actually. Currently, transfer pricing is in a non-faceless manner, where you interact with the officer, but corporate tax is faceless. There you don't know your officer. The officer can only know the query to those answers by what you have written. Now, what you have written has to be very transparent. So, sometimes there is an old saying that the words are more powerful than the sword. एक पुरानी कहावत है ना, क्या शब्दों में ज़्यादा ताकत होती है तलवार से. Faceless में यही बात है. So, if you believe in this, that the words are universal, हजारों को काट सकता है, पर तलवार can cut maybe few. So how do you do this now? This has to be done in a way that आपको information, what you need to source from technology should be quick, fast, reliable. You have to be ruthless in setting that system. If it's not in place, talk to the CFO, your IT guys, and try to get, these are the queries we receive. How my IT system is geared up. Only you are focusing on MIS. What about tax? Tax is also a crucial part. You are a business partner of at least 25%. If you say 25% cost is nothing, then it's okay. We'll live with the contingent liabilities. Try our luck in High Court, Supreme Court. Ultimately, tax would be collected once only. Article 265 will come in. But there is a time duration. It's up to the guy who's heading the tax department actually. How he extracts maximum from the CFO. CFO is his main, I won't say enemy, but the tax guy has to make the CFO his friend actually. Otherwise, they will be not in a common platform. Most of the companies, this problem comes actually. What's the role of CFO? What's the role of a tax head? What is the guy of legal and this and that, you know, and so that intercompany fighting, department fighting, and the additions has happened. The casualty is the company. As we move forward, you would see that the tax compliance is increasing day by day. You know, there is a ESG, environment, social governance. ESG is a new thing actually. Corporates which are not ESG compliance, what would happen to them? Nobody will buy them in international market because I do not know their carbon release in the air. I do not know their welfare, labor welfare. ESG नहीं कीजिए हमने. तो ESG का भी टैक्स ऑटोमेशन से बहुत बड़ा गहरा संबंध है. In sense that it says that when I write my statement in my website that we are totally tax transparent, fully automated company, it is a part of ESG. That I have nothing to hide actually. Anybody can come to my door or seek information. I am willing to give it at a short point of time. And ESG is the future way of doing business only. Some companies who has not scored or yet in application stage or pending or thinking, they would later have to fall into this only. The thing is that whatever you have written in ESG as a policy, If some auditor from ESG comes from US and does a verification, finds some difference, no, what you have spoken is not been actually practiced. So your rating will become nil retrospectively. The company sales goes for a toss. Possibly nobody would be, like to get into that. This is the return season actually. We are already in month of October, November, December. These 2 months are crucial. Tax audit, Form 3CB, employment certificate, 80JJ and all that, master file. All these are requirements. Big companies take for tax audit at least 45 days. To review the trial balance, it may take sometimes 60 days also. Not good enough still. Still you are not satisfied. मैं तो टेक्नोलॉजी भी करके देख लिया, still I am not satisfied. This data is reliable or not. So should I go to the extent of voucher? That what voucher is says and that is punched in the ledger as the entry? How do you satisfy yourself? What is the mechanism which has to be put in place? Very difficult. Somebody, let's say I appointed a Big Four to review my return. Boss, you review my return. What is the process that guy would employ? He'll say, give me your trial balance, tax audit report. That's all. Beyond that, he cannot do. Is that the end of that review? क्या टैक्स ऑडिटर आपसे ट्रायल बैलेंस एंड टैक्स ऑडिट पे सेटिस्फाई होकर छोड़ देता है? नेवर. द थिंग इज दैट what the tax officer does is he assesses your books of accounts, which goes up to the voucher level if the need be. He can order a special audit if the books are unreliable. Some points, some mismatch happened actually. Unreliability, some doubt, suspicion created. It can happen to anyone actually. But your ability to respond to this crisis, this is an emergency situation. How you do it? You have to be doubly sure actually in that sense. Okay, all my GLs have been properly mapped. GST actually has done a great help, I would say, to tax accountants because input tax credit is a core now. Some items would be eligible, some will not be eligible. So you get a fair sense that GL की pruning तो अच्छी हुई भी है and it's more done in a responsible manner. Thanks to GST actually, which helps tax department in a big way. Now, next which comes in list is related to big companies over turnover 7,000 crore master file. You have to state your policies actually. What are your policies you practice in India, outside India, or you are a subsidiary of an MNC operating in India and your parent is not stating the tax policies. What you do? And possibly you are not required to file a master file because your parent would have done it. It's more for outbound companies like us who are outside India. So master file, I need to know what pricing, let's say Dabur operates in US and Europe, what pricing they are following. I need to disclose that out. So every transaction I cannot get to know the policy unless I follow a universal formula, cost plus 5, cost plus 10. But sometimes it happened I did cost plus 3 also. Goods are not selling, so I revise that price by the approval of board. Do you have that data automatically available with you when you are filing the master file? So many details are asked in master file, at least 25 to my mind, of all nature, goods, services, intangibles, everything they are asking you. Your agreements in place. Some agreements might have expired also, which you are possibly reporting it out. It's a huge responsibility, onerous to my mind. Very difficult to do it manually. Practically, how you would do it in a sense that it's an active live document. Your working relations with your legal department outside India, within India, and in a cohesive manner actually. So tax role in a way has increased a lot in that sense because the CFO is the ultimate fiduciary owner of the P&L, but the tax guy is up to 25%, he is still the owner, and that liability can just multiply. And so what would happen? Nobody wants to be in that situation in that sense. So healthy relationship with the business is the need of the hour. I think most of the people here, we know that we have to work closely with the accountants and even with the supply chain or with R&D team and this and that, whatever functions are there in the business. Deferred tax is one more area of concern actually. how do you work out deferred tax at the end of the year? And so one is for the individual company, and one in a consolidated level, deferred taxes. Very difficult to understand for accountants. What's this deferred tax? Accounting hai, book profit, there's a difference. How do I reconcile accrual principal, cash basis, tax holidays, exemptions? All needs to be nudged out in deferred tax. How do I do it? Then you need to keep a record of it. In 2-3 years last, what I did, 43B. क्या पिछले साल 5 साल में किया नहीं किया? You have to have a record to it. People are moving in tax department. Some new guys came in. नहीं पता कुछ. Now, in tax, your assessment can happen up to 10 years. From 6, it has become 10. 10 years का record रखना, even in an automated environment, is not easy. In a way which a tax officer who does not understand, he has to read it, understand, and give you some decision. Very difficult to my mind. 10 साल का record, humanly impossible. But that's the law actually. And non-compliance, as we know, is more painful and expensive. But so be it. We need to live with it. In Dabur, one thing what we have done is, to give an example of automation, is that we are in SAP. Most of the transactions are subject to TDS now. Rate can vary from 1 to 10. Only few transactions are not subject to TDS. Maybe donation is one example. जिसमें TDS नहीं लगता. But most of them are subject to TDS. So what control we put in a place, this we got to know after much experience and some huge notices, that we put a system that whenever an entry is punched, if it happens without TDS, a pop-up will come and go to a tax department that this transaction happened without TDS. So that's the control check balances we put in the system. So whenever a tax officer asks me, are you sure 100% TDS, 40 AIA reconciliation with 34A clause, have you done it? No sir, I did it. This is my pop-up button. Now reconciliation is another matter actually, but the controls what you put in place, it gives you an assurance that no item has been left unattended from a TDS perspective. Only system can do it. I cannot do it. So you need to speak to your SAP experts. How you put that command in place, that pop-up button, that accountant should not do an undue favor or a mistake. TDS नहीं काटा, 100 pay कर दी. That should never happen. Or 31st March provision on goods, 0.1% was deducted, and there is no failure on it. SAP, that command system, that should possibly give you some help, I would say. Or good compliance of TDS is an important thing to claim rightful expenditure in time. Otherwise, it gets deferred to the next year. Multiple records, multiple years, assessments, appeals, so many things. Tax litigation management. So one is the business, 12 months business. One is the litigation. 10-12 साल का record चल रहा है. New guy coming, old left, retired, or something happened to him. Manual files, like in department, but they are also automating now. How do I do it? Handover नहीं मिलेगी. Company will not give the handover. Or even they give you handover, they will be keep on calling you. Can I automate that data? Obviously, I have automated it, but it is explainable. Depends person to person. Some guys may be very meticulous. क्या मैंने ठीक से काम किया, मैंने डॉक्टर वाली प्रिस्क्रिप्शन नहीं लिखी है, मैंने वो जो लिखा है आई हैव रिटन इन अ वेरी नाइस वे, सो अ easy person can understand. Very tough job. So maybe you can ask a 30-40% hike if you have to do this level of work in tax department. It's no longer just an ordinary job. क्या at the end of the year 1,000 crore profit, 25% tax, some deductions, I pay 200 crore tax. That's not the story. For some people it may be a story, but they pay heavy price when they are not able to produce records to tax officers. Very crucial. You fail before IT actually because no records are available. Matter remanded back, the cost goes up. It's a rolling thing then for same year. Even for advanced taxes, though it's an estimate on profits actually, annual operating profit, I estimate a profit. It may vary year on year. Some discounts are available on advanced tax. Q1 offers you 2.5% discount. So instead of 15, you can pay 12.5. Quarter 2, instead of 45, you can pay 37.5. Quarter 3, quarter 4, 7,500, no discount. Some automation possibly can give you some clue as to how you can work out on this. And the last quarter 4 installment, which says that under tax laws you need to pay 90% of tax. If you pay 90% of tax in a year, what happens is that the balance 10% which you can pay with the return of income, the interest would be just 1% actually. It's not for, let's say after 10 months you filed, it's not 10%, it's just 1%. Some planning can be done, but how you do with automation, that's up to you actually. I'm just giving you a clue how it can be done. Manually it cannot be done, but. Now, automation is crucial. TDS is not, I would say, faceless. A TDS guy can come to your home, office, survey. In survey, they can pick your child, ask for any random questions here and there, some invoices allow and give me, show me. Normally, they are in your home office for 12 hours. In those 12 hours, if you are able to demonstrate the strength of the company is automation. If you are able to answer their questions 5 on 5, they are going to go back home. Or even if they don't go back home, they'll do some frivolous additions, which you can get it deleted. But God forbidding, उस 5 में आपने 5 का answer नहीं किया, then the level of scrutiny goes up. That 12 hours may be increased to 3-4 days. Nobody would want to do that. So some investment in rightful, mindful investment in tech has to be there, which is geared up to meet the requirements of tax department. In most companies, nobody wants to invest in this. They think it will happen. No, I'll appoint a Price Waterhouse. They will deal with it. But what Price Waterhouse would do? Ultimately, the detail has to be given by accountant himself or the tax head sitting in the company. Similarly, still 80 JJAA, the employment deduction is there. 100, if you employ more than like if you employ more people from year 1 into year 2, you get a deduction 30% for 3 years. How do you maintain this record? HR department moving out, record nahi milta. It's a pure tax question. Technology addresses this need also. Accuracy comes in. Form 3CBs, transfer pricing. I did my disclosure in related party and that AS18 and all that. I picked that data from Form 3CB. But my Form 3CB has got more avenues actually to pick the data. How do I match it? Next to impossible. With this comes also a segmental accounting actually. Most of companies, MNCs operating, they have business segments like, let's say, manufacturing segment, trading segment, service segment. Segmental accounting. If anybody have understood what segmental accounting is, I can bet you they can never arrive at a correct profit. The SAP is not designed to do segmental accounting. Let's say expense comes, you don't tag this is a service, this is a trading, this is manufacturing. What you do is you pass the entry as a lock, stock, barrel, as an aggregate in the SAP. But how do you prepare the segmental? Is it an estimate? Is it an ad hoc? Is this number reliable? What is segmental? To my mind, it's a farce actually. And if I am a tax officer, I'll never rely on segmental. All those margins are distorted because they are not reliable at all. It is a pure guesswork actually because it has not come out from the SAP as it is. It's a mixture or an assumption or something like that actually. How do you say that salary expense would be this proportion? Have you kept an hourly log of people actually? Okay, he'll work for trading this month, manufacturing this month, service this month. Impossible actually. Some tax office are asking this question, so you have to be prepared for that. It's not a technology question. It can be a technology question if you have worked towards that actually. You can talk on more points actually. In this times, if you look the time frame from July to December, the tax department has to do assessment of 2 years, AY 2021 and AY 21-22, and 22-23 is under progress. Time barring from July 23 to 31st December 23 for 2 years, which includes full of transfer pricing, corporate tax. There's a return due date in the month of September, October, December, November. Tax returns has to go. How do you manage this bulk? This 3-4 months actually. Most of people would be having sleepless nights actually. Very tough, I would say. Technology also kabhi-kabhi madad nahi karta. They have to pray to God that some questions are not asked. Or they ask some repetitive questions, so you can do a copy paste actually. Because there is good fun in doing copy paste. Thoda easy ho jata kaam, same questions he asked and you are just changing some numbers in here and giving it out. Now, the most worrying for us as a company is if the pillar 2 comes actually, which changes the dynamics of taxation, global minimum tax to 15%. How we would address this need, I'm still figuring it out. Taxation is one part of it actually, but global minimum tax is not a tax concept, it's a book concept. Matlab mere ko book par tax dena hai. There is nothing called income tax 61, US law 1800, something like that. It's a concept on book profit. Some adjustment would have to be done. I follow IFRS, they are following some other accounting standard, but how do I nudge that out? How do I bridge that out? And how do I reconcile and bring everything to coherence in sense that when I present the data to my board, it's reliable actually. Before I educate the board, I need to educate myself actually. मैं करूँगा कैसे इसको? To my mind, it's very tough. Possibly थोड़ी sleepless nights निकालनी पड़ेगी इसमें. एक आध sleeping pill ले लेंगे, कोई बात नहीं. But we'll work on that. Anyone having any questions can ask me. Because I'm coming into this presentation, I've been allotted 20 minutes only on this. So only one thing which I want to say in the end is that before you consider any automation tool, like for example dividend, which is a very voluminous exercise, Form 15 CACB has to go in bulk. DDT was more simpler. You can just pay 20% tax and get out. Now that work of dividend has become a monster. You can't do it in-house, not possible. Huge returns has to go. 31st May, SFT, Specified Financial Transaction Reporting. How do you do it? हम लोग तो 2-3 साल से we are struggling from last 2-3 years, not able to put a right technology actually. You go to speak to people in market, you don't get a right technology. Some people might oversell you. No, I have got a fine product with me, but when you scrutinize in deep, you find them not to meeting your expectations, or you may be deceived actually, which the cost of deceive is very high actually. So you have to apply your, I would say, sense, acumen, businessman का ये जो मैं product ले रहा हूँ, or you are contemplating that I'll do in-house actually. I have got consultants like let's say some Accenture or McKinsey or Bosch. So these guys are assisting you in your IT needs actually, because they are better prepared actually. They have got IT background, they are MBAs, so they are able to address your business needs more proper. So before purchasing, can I develop that tool in-house as a module, which is more reliable, accurate, so that I don't have a dependency to third party? Can it be done? This question you need to ask to yourself actually. So in Dabur, our reliance on outside software is very low. As a company, we are more like designed, I would say, to do it all in-house actually, because that provides me more comfort. I think we can speak more on technology, but in the interest of time, I need to come to an end to my this presentation. I thank you for your kind attention. Thank you. Pleasure.